Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be taking a look at the price action we're seeing not only in Bitcoin, but the miners. They've been on an absolute tear over the past week. We want to talk about why exactly that is and where we see the price of Bitcoin going in the next few weeks. In addition to that, you guys, we got a big update in terms of the IREN expansion. We've got new images that came out in their May production report. So we want to compare and contrast that, see how they're doing in terms of that aggressive 30 exahash milestone, and a big announcement from Bitdeer in terms of their R&D roadmap for the Seal Miner platform. So a lot to go through in today's presentation, you guys. Before we get into it, smash the like button. It's 100% free to do. If you're in the Bitcoin mining space, you should be making money this week. And if you're not already subscribed to the channel, McNallie Money, feel free to join. With that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got another banger for you. A lot of action going on this week, you guys. We can hardly keep up. Today, we got some big news in terms of the roadmap, the R&D roadmap for Bitdeer and the Seal Miner platform. We also want to talk about the IREN expansion going on. IREN has obviously been in the focal point or the spotlight here over the last couple trading sessions for their extreme upward share price movement. And then on top of that, and first things first here, Anthony, we got to talk about the Bitcoin price because we are within hairs of all-time highs here, and we just had some interesting price action this morning. So Anthony, how are you doing? How are you feeling about Bitcoin price, and why are we not able to break through 72,000, Anthony?
Doing good today. Seems to be another green day for the miners. So Bitcoin price did sort of get close to touching 72,000 about an hour or so ago, and then it retraced back to 70,500. So it dropped 1,500. So there is some sort of resistance at that level there. I mean, I'm not one of these technical people that follows all the graphs and knows what's going to happen tomorrow and next week. But we know all the sort of fundamentals behind Bitcoin are extremely positive. People are still buying Bitcoin. The ETFs are still buying Bitcoin on a daily basis. Every day, they are buying massive amounts more than are physically mined. And we've even got a chart to show the amount of Bitcoin that's been bought. So in the last couple of days, over $1 billion in Bitcoin has been bought by the ETFs.
I'll bring the chart up right now, Anthony, so they can all see $1.37 billion worth of Bitcoin in the last 2 days. So you and I are fundamental investors, Anthony. We believe in this bullish thesis. We don't necessarily know the timing, but it does appear that Bitcoin is moving up towards that all-time high, and there's not much stopping it now, hey?
Yeah, no, the last 2 or 3 days have been extremely good. And there's no end to this. We've had 18 consecutive days of inflows, and that total is close to 4 billion over the last 18 days. So, when there was uncertainty as how the ETFs would take off in January when they were approved, we can see now that there's more money pouring into this. And from what I gather, again, a significant number of financial institutions were also questioning on when they would be starting to put capital into the crypto space, and 36% of them said in the next 12 months we're looking to put fresh money into this space. So that's a different conversation that was had maybe not even 12 months ago, when the banks were against it. They have to get on board with it now. There's no stopping Bitcoin at the moment. We've had the same through history. We had the same with the internet. That'll never take off. We had the same with mobile phones. They'll fry all the fish in the sea. Well, we're still eating fish every day. So, mobile phones, and I'm on my sort of like 6th mobile phone. So, and I like fish. I've no shortage of fish in the shops at the moment. So that was another lie. So, we have all the FUD about Bitcoin coming out there, but it's great that we've got people who are educating, and we play a little bit of a part in that. We educate, people about the benefits of Bitcoin through our podcast, through the articles that I write for Compass, and explain that it's not just about wasting energy to create something that's meaningless. There's far more to it than that. And so take your time to do some research, look at the education, go to the website. We've got all the articles on there, all the podcasts on there, and go and see for yourself. And then go and listen to other speakers. There's some great speakers in the space who are actively putting out great information to battle the people who are putting out the FUD. And generally, it's the people who've got something to lose who are putting this out there. So think about the banks. When the banks were saying this isn't going to work, this is just a scam, it was their profits that were going to be reduced, because they were making massive profits on letting people transfer money from one place to another place like that. They like a nice little margin there that they were doing that. And by, people are investing in Bitcoin and moving it wherever they want to, without lack of decentralization, you can do that. You can move at an instant moment. The fees are significantly lower. So you're taking out the margin. The same with the mobile phone operators. When they said you could start ringing countries for, next to nothing in terms of price, the telephone companies went absolutely ballistic and said, this isn't right. You'll get brain tumors, and just to try and put you off getting a mobile phone. So we have the same with the Bitcoin price here. But these ETFs have shown that the demand and interest in people investing in the crypto space, especially the Bitcoin space, because we've also now got Ethereum ETFs. So let's not forget there are other ETFs that people can invest in, are being really well taken to in the first few months. And we've said before, what the gold ETF took 2 years to achieve in terms of investment, Bitcoin achieved it in 2 months. So, that just tells you that, we're in something that's fairly special at the moment. And we know there's only 21 million coins of Bitcoin, and already 19.5 million have been mined. So the other 1.5 million that's still got to be mined, that's going to take another 116 years to do it. So, need to get on board now if you're going to, look at getting some Bitcoin in your portfolio. You don't have to buy one whole Bitcoin. I've been buying just fractions of Bitcoin. That's the great thing about it. You can buy small amounts of Bitcoin, and if you're thinking about the scarcity and where it might be, and then these other people that do the technical analysis, they'll sort of give you an indication where it might be next year, the year after, 5 years time, and so but having a little bit in your portfolio is probably quite sensible.
Anthony, now one thing you said there that was really interesting, you said there's no endpoint in sight, and you talk about all this ETF volume, that really created the on-ramp for the general public, right? That was the means to facilitate their exposure to Bitcoin. Now that those on-ramps are in place, you're right, we've seen 18 consecutive days of inflow. So if you look at the supply-demand inequality, it's really starting to become very evident. But as you alluded to, Anthony, where does this end? Because unless these ETFs drastically turn course and start having outflows here, I don't understand how this equilibrium is going to work. There's no other situation in history where we've had a truly finite resource and apparently unlimited demand. So again, we don't know the future here, you guys, but I do feel like we are in uncharted territories because of this ETF variable. And keep in mind, these 18 days of ETF, that's just the United States ETF, not the Hong Kong, not Australia, not any of these other countries that are all flowing into that, any of the corporations that are putting Bitcoin on their balance sheet. So Anthony, I think that's a really interesting concept there. And I don't think either one of us have the answer to that one.
No. And Frankfurt about a month ago had their ETFs approved there. So, in Europe as well. Not arrived in the UK yet, so we're waiting with bated breath for the government or the Financial Services Authority to give their approval. But the fact that it's been approved in so many jurisdictions, it just really means a case of when, not if now. So and you living in the UK, we like to be at the forefront of technology. So I'm quite surprised it took us longer than most to do this. So. But I'm sure it'll happen soon.
And it is interesting watching the evolution of an industry, right? This is exactly why the United States has that persona of innovation and technology and business and freedom. They're always, it seems like, on the forefront, the first one to approve the ETFs. They get the institutional investors behind it. And then all of the additional technological advancements happen after that. So really interesting to be a part of history. And you're right, Anthony, play our part in educating the community here. Now, next up, you guys, we wanted to talk about hash price because this is very closely related to the price of Bitcoin. This is probably the metric the miners use the most when looking at profitability. This one obviously was cut in half during the halving. That was expected. We saw crazy transaction fees for the next few days. They were calling it the trebling. And then it fell back, hitting a low of about $50, Anthony. But that's changed. We're creeping up now over the $60 mark. That's extremely bullish for miners as well.
Absolutely. So in the last month, we saw the hash price drop as expected. Once we'd had those 3 or 4 days of really intense transaction fees through the runes being played out. And then we saw that the hash price drop then to lower than 50. So, you know, a month ago, it was at $44 per petahash per day, which is actually lower than 50%, more than 50% down on where it was pre-halving, because we saw that the hash price was, you know, in excess of 100 all those days leading up to the halving. So we were thinking 50 would be about the norm, and it did drop to 50, but then it dropped to 44. However, this last month, and you can see from the graph on the screen there, that the hash price has now gradually increased, and it's increased by the tune of about 50% since a month ago. So today we're in the sort of, you know, $64 per petahash per day revenue stream, which is extremely good for the miners. You know, they still, you know, some of these miners, obviously, they've got really efficient machines and can probably handle, you know, I did speak to a miner in London in April, and I'm not going to say which one it was because, you know, but they said to me that it would have to drop to 29 before they started switching off or considering switching off machines. So there was still some sort of like margin to be made, anything above the sort of like $29 a petahash. So even at 44, it was still bringing in a good margin for this company. Now at 64, it's bringing in a really good margin. And then we also see at the same time, it's, you know, the expectation of the Bitcoin price at the moment, you've already articulated it, go, you know, maybe get an all-time high next week. It's looking, you know, that we're holding this 65 line now, and it's testing the sort of, you know, the getting close to testing the all-time highs. So it looks good for miners. The network hash rate is still around about the 600 exahash, and difficulty has been going up. So difficulty was anticipated on coming down. Difficulty has been going up. So it means that production numbers aren't really, you know, getting any better for the mining companies as they thought they would be when they were looking sort of like 2 or 3 months ago. Post halving, inefficient miners coming off the network reducing in terms of global hash rate, therefore difficulty decreasing, more production for the better miners, so more efficient miners. Well, it hasn't really happened. So if I look at this, and look at May, and I haven't had all the results in yet, but generally across the board, you're looking at 43% reduction in the amount of Bitcoin mined per day during the month of May than during the month of April. Now, the halving occurred on the 19th and the 20th. It occurred on the 20th in sort of like the more advanced countries in the world, but in the US, it was on the 19th. But you know, so you know, at the halving itself, on the 19th and 20th, you know, we were seeing, you know, great levels of transaction fees. Yeah, since then it's been onwards and upwards for all miners, because we've seen the global hash rate grow. So it hasn't really reduced. I think there was one 2-week period where it came down by 2%. I think, or no, sorry, 6%. But the following 2 weeks, it went back up again by 2 or 3%. And again, it's looking likely we'll see another increase. And again, if the Bitcoin price keeps rising, it means that the hash price is improving for all miners. So we just have to be mindful of that there. But the last couple of sessions today, just to give you a heads up, Mike Alford put out a tweet to say that miners were getting rewards on top of their block rewards, so transaction fee rewards, to the tune of about 2.5 to 3 Bitcoin. Now, if you add that to the block reward of 3.125, you're getting close to 6 Bitcoin per block reward. That was the pre-halving amount. So, some really good. Now, whether it can continue, but we can look at the graph and look at that trend. It does seem to be going nicely upwards there. It's not like it's volatile. There's a pattern. It's rising there, and we've always said that at some point in the future, transaction fees would probably have to be incurred, because the miners need to still be able to mine Bitcoin profitably. And transaction fees will play a part in the actual rewards, not just the block rewards. Transaction fees will play an equal part in that.
Yeah, and the thing with transaction fees, you guys, the more volume on the network, the more demand, the more transactions, the higher those fees go, the more money people have to pay to move their Bitcoin around. So this is directly correlated with FOMO. Because retail investors generally aren't making as big of purchases as institutions, a lot more smaller transactions, which is generally bullish for the transaction fees. So appreciate you walking through that one. Now you talk about uncharted territory and graphs moving up and to the right and all the rest, Anthony. Another one is IREN. They have been really breaking out into uncharted territories, really moving up and to the right. They're up 111 or 12% in the past month alone. Right now, trading at $10.73. You guys, we put out a podcast last Wednesday talking about IREN breaking through $5. So they are well above the $1.5 billion market cap now. This is truly a miraculous move in price here in the last couple of days. And I know you've been following IREN for quite some time. You actually brought along a few pictures, Anthony, of their Childress facility, and just incredible to see the scale. You can see the zigzag design that Daniel Roberts talked about, them learning through their construction process, implementing that in the new buildings. But walk us through what we see on the screen here, Anthony, because this is really something special.
Yeah, this is great, and bear in mind we've seen that move in the price now. Once they announced the additional growth to 30 exahash, puts them firmly in that top tier number of miners there. I mean, it was going to be probably top tier anyway at 20 exahash, but to go to 30 by the end of the year certainly puts them in that bracket there with the likes of CleanSpark, likes of Marathon Digital, and also Riot have got a target of over 30 by the end of the year as well. And who knows where they might end up with what they're doing at the moment as well. It might even be significantly more than 30 if they can get all their ducks in a row. So with IREN, we every month we get the update, and what they do is they put the photographs of the Childress site in there because they want the shareholders and investors to look at the growth in their facility. And we've seen these buildings go up one by one, throughout the last sort of year, 18 months since they've been breaking ground at the Childress site. So as we speak at the moment, they have 5 completed buildings, which is 100 megawatts. Each of these buildings is 100 megawatts. So if you can look at the April one there, where they were getting close to the 10 exahash, which they achieved in very, very early May, you can see the 5 buildings there completed. Move now to the end of May, and we'll now put up the second picture from the May update, and it will show you what's happened in the last 30 days. And what you can see now is you can start seeing now that the foundations for building 6 are in place. They're starting on building 7 and 8 in terms of foundations, and the infrastructure for building 6 is starting to go up there. You can see the frames of the actual site there. So we were questioning as recently as yesterday about how are these miners going to get to their growth strategies, and we had Dan on the podcast this week, so I had a great podcast with Dan, and he was he was probably as laid back as any CEO we've had on the podcast there. It wasn't a worry to him whatsoever. He's come out there 30x. That's just a number to me. He's not. But we as investors, we as followers of the miners in North America, if you state something, then there's an expectation that you do it. Although history would tell us that very few miners actually achieve their their growth strategy, but it shouldn't be something that they take the foot off the gas just because, well, we never did it before, so we won't do it in the future. So we still like to see the effort made to get there. So I've been looking at this morning and looked at the numbers. Now, bear in mind, IREN has put in a sort of like a growth of their hash rate in a diagram that explains how it's going to happen. So by the end of Q3, which is the end of September, they should be at or around the 20 exahash, which was their original target for the end of the year. That's been brought forward by 3 months, and it tells you how they're going to achieve that. So they're going to replace some of the miners that are already in some of those first 5 buildings, and they're going to replace them with S21s. Now, the miners they're replacing with S19 miners that operate probably about 50% as efficient as the new S21s. So by taking, and they're going to have to be taken out somewhere in the region of about 40,000 these miners, because we're looking at 4 exahash. So we'll take out 4 exahash of S19s, and they'll replace them with 8 exahash of S21 Pros, which in fact is this, it takes up the same amount of space, because the S21 Pro is twice as efficient as the S19. So you're getting twice as much terahash coming out, and the power is using about the same 3,500 watts of power to deliver 234 terahash. So that's part of the deal. That's a sort of like an easy win. That's not extra infrastructure. That's just literally taking machines out, replacing them. That can be done quite quickly and quite efficiently for the company to do that. What they do have to do, though, is then they have to get to 30 exahash. Having sort of like, if you think about it, they're at 10 at the moment. We know they're going to replace and increase by 4. So they've got 14 effectively without any additional infrastructure. These extra buildings now need to accommodate 16 exahash. And each building, if it's filled with S21 Pros, gives them in the region of another 1.333 exahash. So to get to that additional 16 that they require, if you look at 16 divided by the amount of hash rate per building, which is 1.333, it means that they need 12 of these buildings to be completed by the end of the year to achieve their target hash rate of 30. And that's put it in very simplistic terms. I'm assuming everything, the size of the machine, and I think I've been informed not by Dan but by other miners as well, that it literally is it's space saving, because you get so much more efficiency, so much more terahash, that it's just literally, you can double using the same amount of space that you're incurring there. So it's just taking one machine out, putting another machine in there. That's just twice as powerful, delivers twice as much. So that's an easy win there. But they still need to do 12 of these. Now, bear in mind, over the last 12 months, they've delivered 5 of them. And they've got 12 to deliver effectively in the next 7 months as we speak now. So we're into June now. In fact, we're only 3 weeks away from the end of June. So but you can see that with that design there, it looks like they can get these things, looks like they can get them done quite well. And we know that even when Argo built the Helios site, they built a 200 megawatt facility from scratch in about 7 months. So, I probably feeling a lot more comfortable knowing what the plan is, and they know what the plan is. They know they've got to create 12 of these buildings. They'll be able to do project manage that and understand what needs to be driven, should there be any bottlenecks between now and the end of the year to deliver it. But we'll have that first target to achieve at the end of Q3. So if we're on track for 20 exahash, who's to say then we won't get the 30 exahash? But that's in a sort of nutshell with regards to IREN as to how they're going to get to 30.
Yeah, I really do appreciate them putting in those images. As they say, a picture says 1,000 words. And when you see all this stuff in text, it's one thing. But when you see it with color on the screen in front of you, it's another. And almost like prefabricated homes at this point, Anthony. They're just racking these things up one after the next. And you talk about the density of their compute or the density of their data centers. And that's exactly right, you guys. As these machines become more efficient, they're able to fit more and more hash rate into a smaller and smaller space.
And if you think about it, if you look at what they're doing, it means they can have a multitude of skilled personnel all working at the same time, delivering different parts of that construction as it grows. So, you'll have the civil people who are doing the foundations. Once infrastructure goes up, you'll have the electricians and all the skilled personnel that way, the technicians, and everyone can be working together. So it's not a case of we've got to wait for one building to do everything. These buildings will be staggered now to get to that time. So by project managing this, it should be a done deal. They've got to do, I think, 2 substations, so they've still got to do the substation, but all the big power stuff is already there. It's just, we're talking now, it's simpler construction required now, but a lot of it, but manageable, and they can just bring in extra resources they require to get it done through the line there. Because if they do achieve it 30 by the end of the year, then that'll be a massive tick in the box for the company in terms of achievement. And we've seen what happens, like with the likes of CleanSpark when they started to achieve some of their numbers.
Yeah, we certainly did. Now, this is a great segue, Anthony, to the next part here, because Bitdeer actually put out their roadmap for the seal miner development. And we talk about fleet efficiency and improving the overall hash rate of these machines. They're targeting 5 joules per terahash by their 4th iteration of this machine. So, Anthony, we've talked about the H100 with NVIDIA and the rate that these chips are being innovated on. We're seeing the exact same thing with the mining machines, and 5 joules per terahash. Keep in mind, you guys, last year fleet efficiency averaged 35. So that is 7 times more efficient, meaning 7 times less energy, meaning 7 times cheaper to mine a Bitcoin. I think that's by 2025, they're expecting to have that 4th version out. So in just the span of a couple years here, you guys, a 7x increase in efficiency. And keep in mind, Bitdeer, they only came out with the Seal Miner A1 recently this year. They announced that. So the development, the R&D team here, Anthony, you've talked about it a lot. Now the addition of this new company that they just purchased, they are really going after this market full steam ahead, hey?
Yeah, I mean, it's great, and they've done it in stages as well. So the first generation mine that they produced earlier this year, 18 joules, 18.1 joules a terahash, which is extremely efficient. I mean, the S21 Pro is at 15, but Bitmain have been making strides in this area for a number of years now, and we've seen go from the S19, S19 Pro, S19J Pro, K Pro, XP. Now onto the S21T, S21, S1. So they've had a lot of iterations of improved generation. And actually, when the S19 XP came out, and I was in Amsterdam last year, there was talk, that we're getting close now to the technological line. It's sort of leveling out now. There's not much more we can do now in terms of chip efficiency. But we get this update from Bitdeer. And I mean, the next generation at 14, the 3rd generation at 10, and then the 4th generation at 5. I mean, if 5 is achievable, and that's in a year's time, by Q2 2025, so not 2 years, 1 year time. We know that Bitdeer, were formed out of Bitmain, so they've got some of that secret sauce in the company there as well. It's not like they're a brand new company who've never even looked at how to to produce Bitcoin miners. They've got 50 staff in terms of R&D, teams. So that I looked down the miners the other day. Most of the North American miners haven't even got 50 staff, and Bitdeer have got 50 just working on R&D. So they can see something in this. It's going to be another part of their portfolio. So they'll look to deliver. They've got a massive growth strategy over the next 18 months. They've got some massive sites. They've got a 500 megawatt site in Bhutan that's being built at the moment. They've got a 170 megawatt site in Tidal in Norway. They've got a 200 megawatt site that's just broken ground in Ohio. Add those numbers together, you're heading towards a 1 gigawatt of sites to be completed, on top of the fact that they've got big sites at the moment in the Rockdale area, and also they've got sites in Bhutan as well. So they'll need to fill these sites. So, the emphasis will be, priority one will be to get their own hash rate up. And they've said, if they do achieve any of these targets, I mean, so second generation target comes out better than the S21. And it's all about, as this halving occurs, it's all about who can be the most efficient, who can mine the Bitcoin at the cheapest price. These are the sort of numbers that are going to set companies apart from each other. So yes, we've seen CleanSpark, Marathon, we've seen Bitfarms go for the S21, S21 Pro, T21 in some instances there. We've seen Riot go down the M60 route for MicroBT. Now we're seeing Bitdeer bring out their own arrangement of machines there. And yesterday, like you said, they just signed up with a Bitcoin design company. They design ASIC. So they're taking this. It's not just words; it's taking it quite seriously, because that was $140 million investment yesterday that occurred. So this is going to be potential. If they can get to that 5 joules. You're right. Just think of the energy cost that's required then to mine a Bitcoin, and how much they've got in terms of margin. This will be game changing, because it'll be, like you say, 6 times more efficient than an S19. And there's millions of S19s out there at the moment. This will be game changing. And if the price of mining machines increases, what they said is, we'll jump on that as well. We'll start selling our miners, to other people to use. That brings another income stream. But if it doesn't, we're still going to have, but they're still planning to grow to over 40 exahash in 2025. When these sites are completed, I've just explained to you, IREN are going to grow 16 exahash using 240 megawatts of power. And if Bitdeer have got 800 and more megawatts coming online next year, put that into the calculation and see what that delivers in terms of exahash. That's a significant amount of exahash. And bear in mind, these miners now are saying those big sites aren't going to become available in the future like they have in the last year or so. So, Bitdeer are locked in. Yes, they're going to have to raise some funding to get there. But they've been very good at raising money recently. They got that 100 million deal with Tether with an additional 50 million in warrants should they Tether decide to take up there. They've got an ATM in place at the moment as well, and we know that if miners are using ATMs to grow hash rate accretively, that's a good sign, because we've seen the model for IREN, we've seen the model for CleanSpark, we've seen the model for most of the miners who are able to grow. So Bitdeer are in that bracket now, and looking well and truly aiming towards getting top tier next year. And we haven't even mentioned the HPC side, so we'll leave that for another day.
Well, and what I really like about this story, we had Bitdeer on the channel and they said, hey, look, we're not getting into this game to be second or third place. We want to be the #1 mining rig builder, producer, manufacturer in the world. And you're right, Anthony, these sites, when you're talking about gigawatts, we're talking about hundreds of thousands of mining rigs, you guys. And the nice thing with Bitdeer is they've got a hosting business with staggered contract end dates. So based on the price of Bitcoin, they can choose, as those contracts roll off, to just backfill those with their own rigs that they're building in-house and convert that from hosting to self-mining. So a lot of flexibility here, a lot going on. And I think most people, at least in North America, don't really fully understand what Bitdeer is doing or what they're capable of. So again, definitely take a look at.
Just think, Bryce, as the Bitcoin price, if it's on its trajectory now to rise over this next 12, 18 months, and these machines start coming online at these efficiency rates, they also have a cloud hash rate business, which is where retail investors can buy in, buy their own hash rate. And, if you're getting sort of like the miners of this efficiency, that means, even you're making a great margin. And if you're making a great margin, Bitdeer are making a great margin as well. So, in times when the Bitcoin price is rallying, that's a great business to be in as well, because it's a win-win for everybody. It's a win if you're investing there, because you'll be paying the energy cost, and the energy cost in a year's time, if it's 5 joules. I mean, just bear in mind, who released yesterday? So TeraWulf released their numbers this week, and the cost to mine a Bitcoin in energy terms was 31,000. Now, TeraWulf's efficiency let's say it's around the 2024 level. So, you know, at 31,000 at the 24 level, if you're getting down to 5, that could be, you know, $6,000, $7,000 to mine a Bitcoin. If the Bitcoin price is 70,000, you've got then $65,000 to cover your overheads. So all their services, you know, will be massively, massively win-win-win for those.
Yeah, most definitely. A lot covered today, you guys. We appreciate the time. We're going to be traveling next week, so stay tuned for that. We're on the road visiting the Denton facility and Corsicana. If you're still watching at this point, smash the like button for us. You should be making money if you're in the Bitcoin mining space today. Leave a comment, and we'll see you next week.